Good evening on my behalf. It's a great pleasure and privilege to be here and present briefly United Bankers plc. Thank you, Inderes, for the opportunity. My name is Patrick Anderson, CEO of United Bankers and fourth biggest shareholder. My own background is on the islands between Finland and Sweden, where we have cultivated land and forest for several generations. And at UB, I've been active for the last 24 years. Last 17 of these as CEO. So really excited about the growth and transformation we have behind us and ahead of us. I'm going to talk very briefly about who we are, what we do, about our growth strategy, and about the company as a listed investment. First of all, we're one of the oldest Nordic asset managers. AUM-wise, we are a mid-sized player. 4.6 billion euros was the AUM in end of June. We've been listed on the Helsinki Stock Exchange since 2014, first on First North, and then during the last 3 years on the main list. We are a team of roughly 200 persons, and our core business is really managing alternative funds. The total amount of funds currently is 25. And worth mentioning, among other things, we are currently the third biggest private forest owner in Finland. And as most of you know, Finland is more or less only forest. So third biggest, meaning at this point roughly slightly bigger than the island group of Åland is the forest we are managing currently. We have a long history behind, and the company has undergone several transformations during the way. We started in 1986 as a stockbroker. The picture on the left there is from the stock exchange in Helsinki, where we had a desk like the other ones back then. During the 90s, we built up, alongside the stock brokerage, a high net-driven wealth management. During years 2000 to 2015, we broadened the spectrum to mutual funds, focus shifting more and more to institutions, and focus shifting more and more to alternatives. And at this point in time, a big majority of our business comes from alternatives that I will describe to you shortly. Key for any success in this business is the team. I'm really happy and proud about the team I have currently. The core of the team is the same that I started with 24 years ago. And of course, as the business has developed, the team has strengthened significantly, being now roughly 200 professionals. We, as a team, hold 56% of the company, so we're actually kind of a hybrid between a public company and a private partnership. And this really shows the commitment. The team has close to 90 million euros invested in the company, and that really guarantees the incentives being aligned between the team and the client. And of course, with external owners, such as, for example, yourselves. Last 5 years, if we look at the graphs here, you could maybe assume that the world has been quite calm and nice and nothing really exciting going on in the world. Surprisingly stable historical development. This is basically just showing the execution of our current strategy, which I will describe more in detail shortly. As all businesses in this sector, the cost level is is very much fixed, which means that when you generate growth, that is often translated into a certain type of hockey stick in the EBIT and EBITDA rows, which can be seen here. And have to mention that the last 3 years, of course, with COVID, with Russian aggression, etc., has not been normal years. So really looking forward to having a year with some tailwind as well at some point. What we do is, at the moment, if we look at our top line, basically 3 areas that generate a big majority of our income. Forestry, which we are probably the most well known for. Real estate, which we are investing in on the Nordic level directly. And then listed real estate and infrastructure that we're doing through the public market. These 3 are the big majority of what we are currently doing, but what I'm very excited about is that we are leveraging on this core competence that we have in the group and moving, for example, in forestry to higher added value areas. So if we see forest and land as a raw material for example, forest fiber, which is an amazing raw material, we can actually, by further utilizing new innovations and technologies, we can be part of solutions to global problems, such as plastics in our oceans. With forest fiber, we can replace more and more plastic solutions in packaging, for example. With forest fiber, we can replace cotton, which is extremely polluting when you do clothes. With forest fiber, we can replace, for example, in Tesla batteries, you have 100 kilograms of graphite, roughly. You can replace with lignin from the trees, you can replace that as a raw material. We are moving from very old school, cutting trees, building houses, building furniture type of businesses to being part of the solution to certain of our problems globally. Also, forest is an amazing, or the land under the forest is an amazing source of energy. We are currently within our new energy fund building and developing both wind, solar, and different types of energy storing solutions. So basically leaning towards the forest and looking at it from a private equity, innovation, higher added value point of view, and also traditionally utilizing the control of the land and what it means in order to build and develop renewable energy faster and with less hassle than if you don't control the ownership of the land. And we're very excited about this. A couple of words about our current strategy, which has been, as long as I have been CEO, it has been roughly the same. We have updated it slightly a couple of years back. But basically, it consists of 7 components. First of all, key to all success is, of course, that you generate added value to your client. Your client is happy, your client gets wealthier, and that you exceed clients' expectations. That's very important for us. In order to do that, you need to have unique competence, unique products, both, and unique team, unique competence. We are focused on real assets, which is forest, real estate, and then energy and forest-related private equity. This is a very unique offering, both when you look at the Nordics and if you look broader in Europe. I'll come back to sustainability shortly. Technology, of course, is key to any business, both externally towards clients and internally to deliver efficiency and increase that. And we have been working a lot on both simplifying processes and streamlining the organization and focusing on the core. We believe that will be a bigger and bigger portion of our business. That is the alternative space we're working in. Growth is key, of course. It's a scalable business, but on the other hand, you need to stay far away from the rising cost barrier that is very much, it can be related to regulation, it can be related to ESG, it can be related to technology. The ones who grow will have the economic means to serve their clients better, to generate better returns, and to invest in the team. Growth will take place organically and via M&A. We have a history of doing quite regular transactions, purchases. Now we have not done that for a couple of years, but we are still very much looking for alternatives that would enhance our growth and or enhance our competence within chosen strategic areas. Last but not least, scalability. So we invest only in scalable solutions, and that is funds, that is mandates. Everything else is non-core, and the percentage of our business coming from scalable solutions has never been higher than it is currently, and it most likely will continue to grow as a portion of the business. Then coming back to the middle one in our strategy, sustainability, responsibility. We're very happy about our company being now for the second year in a row among the most inspiring workplaces in Finland. Very happy about that. The team has rated us as an employer even higher than last year, which is remarkable, especially when we are living in times of war and economic uncertainty, etc. Very happy about that. We are, of course, focusing a lot on being transparent as being a main listed company. That is, of course, license to operate type of issue. But mainly, I mean, our biggest effect is, of course, via our investments. So as a small 200-person company, the fact that we maneuver and manage 4.6 billion euros within areas such as forestry, forest innovations, energy, etc. Not to forget real estate. It gives us a huge leverage in being part of changing and making the world a better place. And that is something we're very happy about. Financial objectives, we have two of them. To double our size in 5 years and to deliver a 40+% operating profits level. The latter one we are quite close to historically, and of course the first one will be a combination of M&A and organic growth. Most likely we're not going to continue to purchase traditional asset managers being invested in or having a big exposure in equities and debt, traditional asset classes like we have done historically. Most likely we're going to look at targets closer to our core businesses or new core businesses leaning on the competence we have in-house. We have been Sauli mentioned here in the beginning that The Helsinki Stock Exchange has a lot of great dividend payers. We have been among the leading ones here as well. Quite a stable development here. Our new dividend policy is to pay out 70% or more of the earnings per share or the cash flow per share. Historically, we have usually been more generous than that. Looking forward, where are we going? What are we going to do? Our home markets are Finland and Sweden. In Finland, we have, among institutions, a decent market share. In Sweden, we have a growing market share. On the high net side, we have a footprint, a long-lasting footprint in Finland. But it's clear that when we are working in quite niche areas, the most logical way to grow significantly in size is to go to markets where institutions, for example, have very low weights in forestry or forestry-related private equity, for example. And that is our first step is Central Europe, where we are actively fundraising, both to our private equity fund and to our forestry new forest fund. So to simplify, we want to do less different things. We want to focus even more and further from where we have been historically, and do it in a bigger scale than before. And therefore, European expansion, but keeping the focus on private assets, alternatives such as real assets, forest, real estate, listed real estate and infrastructure. This is the direction we are heading. We are, you could say that from looking 5 years back, the last 5 years we have still been, so to say, turning the ship onto the new course, and now we are on the course. So now it's actually just to put some more RPMs to the engines and get the ship to move faster to the chosen direction. Very exciting times ahead. Would love to have you either as investor in the stock or as client or both to share the journey going forward. We're gonna report on the 16th of February, so we're soon into our silent period. But if there is any investor relations related questions, myself, our CEO Inka Norama, and our investor relations manager Mario Åström are very happy to answer to any questions. Thank you, Inderes, for the opportunity. Thank you.
Thank you, Patrick. Please have a seat.
Thank you.
Yes, so let's start with the market-related themes. So we have had kind of drastic change in the interest rate outlook and how fast the yields have actually risen. So have you made or do you see any need to make any adjustment for your strategy when we are now exited from the zero interest rate environment?
No, as I mentioned already, the weight among institutional investors in Europe, for example, in forestry related, is so low that we see room to grow as these asset classes are part of a diversified portfolio, no matter if the interest rate is 6 or 2. Then, of course, now we are in a situation where the yields are possibly coming down. What are the real interest rates going to be going forward? That's another question, because even I've been in discussions with professional investors that still were mixing real and normal interest rate.
So
nominal.
So basically, even though the credit is more relevant asset class, again, you are not more keen to trying to attract more credit capital under you. You focus on the privates.
We've seen growth on the interest side as well, but it's a very small part of our business. Our focus is clear. Both when you're talking about pure equity risk and bond risk, that is not where our growth will come from. It's more these are actually probably our forest. The tree looks familiar.
So do you actually see that you would be better off in the zero interest rate environment, considering then the alternatives would be more like the only game in town, when now we are in the environment where actually credit is viable option again for your clients?
I don't see it as a very healthy environment to be in. Let's say what has shocked many has been the speed of first the inflation and then the interest rate hikes. Any environment that is more predictable is, I think, better than these shocks.
Yeah. Then about the forest funds, your funds target the steady 4 to 6% annual yield. Is that attractive enough in this environment where you can actually earn decent returns on the credit side, or how your clients see this?
It depends on if you're looking at the real interest rate or absolute.
Yeah.
Nominal.
Yeah.
Because 6% real interest rate is quite good. Of course, that is not a typical forestry return. But as part of a diversified portfolio, you should have both. Not either or.
Yeah.
And most investors have very low weight in forestry. In Finland, the weight is reasonable, but the further away from here you go, for natural reasons, the lower the average weight is.
The forest funds have continue post excellent returns during the past 2 years during the bear market and the yield rise, although most of the other real assets have basically come down. For example, real estate, they have come down a lot. So why haven't the forest related asset come down more?
Of course, you have seen a slightly rising yields there, but the main reason is that the war that Russia activated and initiated has decreased the import of timber radically to the European Union. So the timber prices they have come very little down. And then, of course, will the forest return be as strong as they have been the last 2 years? Probably not, because they have been boosted also by inflation. The inflation hedge in forestry works much better than in real estate. So the historical returns have been slightly too high, but there is reason to believe that the timber prices are not in any type of a bubble, and the more we can utilize forest fiber to generate more added value products, the more valuable, of course, the raw material will be. At the moment, half of the biomass is burnt, which is the lowest added value use you can have. Yeah. So any use better than that will naturally make the raw material over time more interesting.
Looking at the real estate market, we have had kind of a lot of discussion even in media in Finland about the open-end funds on the real estate, and there has been, many of the funds have been in trouble when they are not being able to pay out the redemptions what the investors have made. So what is the situation in your open-end funds? You have 2 major open-end funds in the real estate space.
Yes, we have a Nordic one and a Finnish one. Returns have been flattish this year and some redemptions, but we are talking a couple of percentage of the total AUM. So far, very little activity there. But of course, the market is uncertain. On the other hand, we are most likely going to see decreasing interest rates, which would, or it could mean that actually the coming 12 to 18 months is actually when you should buy and not sell real estate, especially if you have technical sellers that for one reason or another have to exit. We have leveraged players on the market, especially in Sweden, but also in Finland. There can be special situations. It's hard for me to see that we would be very much lower 2 years from now on the market. But then before that, there can be very interesting buying opportunities. So who will have the muscle, the liquidity, and the
Dry powder, basically.
the dry powder when the best opportunities materialize. I mean, most of the concern has been around housing funds. Now the question is, are we getting also nervous on commercial funds or commercial real estate or care or whatever? Yeah. But housing has been where the investors have been the most nervous on the Finnish market.
Yes. Then about on your growth path, you are currently ramping several different funds, although as we already discussed with Capman previously, that the fundraising market is really tough at the moment at the private asset side, obviously due to the fact that there is a bottlenecks there. So what gives you the confidence that you are able to raise all the capital in several funds during this very difficult period? Or at least more normalized period, I guess.
Yeah, it's of course not going to be easy. You need a brilliant team, and then you need a lot of client meetings. It's not easy. It's hard work. Most likely, I mean, looking at our net subscriptions this year, the biggest positive contributions have been in forestry and now this energy and the forest private equity. Most likely these three are going to continue to be the ones that attract capital. And then the real estate side, due to the quite sour sentiment, is probably going to be less of an attractive, even though it could be that you should actually now be moving to the buy side.
What do you feel is the bottleneck at the private asset side? Is it more of the over allocations of the investors, or is it more just the uncertainty relating to the where the yields are and what happens to the economy, etc., or is it both or something else?
If you talk about institutionals, my view is there we are. It's an allocation question, whereas on the private side it's more of a sentiment question. How do you feel? Institutions understand what is the inbound or inbuilt upside in these over time. So for them it's more of an allocation question. And is capital freed from other sources at which pace, etc. Pia mentioned transactions being slower. Yeah. That is what will then. I agree that will help us moving forward if and when it starts again, the machine.
Yeah. Your core growth target, the 10 billion AUM, it's ambitious one. You could say at least. So how much M&A is built on that inside of that, or can you reach it without M&A?
We have not publicly opened any figures, but let's say. More than half can be organic. So it's not like the majority would need to be M&A based.
But
that's the ballpark.
But then that basically implies that you are open on M&A, and I think on the recent AM Watch interview also mentioned that you are more open to M&A than maybe
that's correct. Yes.
Maybe before. Can you open up your more of your stance on M&A? Like, what are you more actively looking, or previously, I guess you more maybe be kind of a passive mode that you are willing to talk but not maybe initiate the conversations. So
yeah, I mean previously we have via M&A entered the forest business. We have entered the listed real estate and infra business, whereas the physical real estate and the energy and the forest-related private equity have been organic projects. So we have actually done both. But in addition to these, we have also been purchasing like generalist asset managers to get critical mass, which we then have transformed into our models and our way of working. Now going forward, I would say we will be much more critical on whether the target really helps us grow in the selected focus areas, and or if it brings some really exciting, interesting, and highly potential new competence to the group. So that we would go and buy like equity debt fund management companies, for example, in the Nordics, unlikely. Then, of course, we come back to the culture and values need to be there. The price needs to be there, and the brand has to be perceived positively. We can't take any brand risk. So quality, price, and values. In addition to that, so very easy.
Sounds easy. Yeah, you mentioned Nordic there. Would the logical place to find that kind of target be in the Nordic scope, or is it in the Finnish market? So obviously, Finnish market there is just a handful of players and everybody knows each other. Basically, we are in a small market in that sense.
Yeah, I guess everybody has on the Finnish market each other's numbers, so that's not. And time will tell. But yeah, I mean, as we want to grow in Central Europe and broaden also our client base in the Nordics from Finland and Sweden to Norway, Denmark, something that would help us on this task is more likely than us buying or merging with local players.
Finally, on the M&A, would you be willing to consider an option that the United Bankers will actually be the smaller player on the transaction, so you would be kind of a backseat and somebody else would be driving that mobile on the field, or do you want to be the driver in that sense?
I mean, so far we have wanted to be the driver, but of course, in the end, it's a question of money.
Yeah, and the stock exchange is open 5 days a
Precisely.
week, typically. Yeah. Thank you, Patrick, very much.
Thank you, Sami.
For your questions. And now, next, we have Sampo, and please, Sami, go ahead.